however you happen to be watching this. Thanks for doing that. It's good to have you today. Today, I've got a good friend of mine, a long friend of mine, Dave Landry, and we're going to talk a little bit about, among other things, his submarine pattern. So, in any case, um, just a few things as we get started. I had to read this so our lawyers are happy. If you're watching this, if you just clicked onto this on YouTube, I want to kind of just let you know this is a podcast style event. It's a little bit of a more of a longer form session. We're going to talk a lot about trading and that kind of stuff. So if this is something you like, hit the subscribe. It helps a great deal. We appreciate it. Let me start with the legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell any securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. I lost my place. Metastock, the Traders Forum, and their employees and their guest speakers disclaim all liability for investment decisions by investors based on the use of the software, trading strategies, or any information provided in connection with the companies. Metastock, the Traders Forum, LLC, their employees and guest speakers do not endorse the purchase of a security. We're not paid to promote a security. No information contained in this information should be construed as investment advice or the solicitation to buy any security. Dave, you would have thought I had been through that a few hundred times, but
yes. There's a lot of other things in there, like in case of rash, just continue use. If you smoke after sex, you're doing it too fast. It's I just kind of gloss over all that, but yeah, you can. I often sum it up as we said before, borrowing a line from Greg Morris. All predictions are about the future, and a lot of stuff can happen between now and then.
Yeah, for sure. For sure. And it's kind of looks a little spicy for the future, I would say.
Yeah.
I do want to give everybody an invitation to join the community if you haven't already. You can find it at thetradersforum.com. It's a place where you can chat with other traders, learn about the markets. There's a lot of information about technical analysis up there. You can join and get started for free at thetradersforum.com. And then also, I do have this, davelandry.com. Dave is our guest today. Dave, I asked ChatGPT to give me a bio, like a way to introduce you. Do you want to hear what it said?
Okay.
Yeah. Dave Landry is a seasoned trader, author, and educator with extensive experience in swing trading and technical analysis. He has authored several books, including Dave Landry on swing trading, The Layman's Guide to Trading Stocks, and has been actively trading since the early 1990s. In 1995, he founded Sentive Trading, LLC, a trading and consulting firm operated under DaveLandry.com. Dave also hosts The Week in Charts, where he discusses trading strategies, market analysis, and trading psychology. And they got that all from DaveLandry.com. Do you have anything to add to that?
I think that's pretty much it.
Okay. There's something that before we get started, we're friends on Facebook, you and me.
Yeah.
And I think this is a good way to introduce you before we kind of get out of the slideshows, because I have it ready to talk about. And you posted this week.
Yeah.
And so I just took a screenshot of it. And you call this the submarine pattern. Did you use like artificial intelligence or like a computer scanning software to find this pattern?
Well, I mostly eyeballed it. I think it was a gentleman about 10 years ago, or maybe it was probably 20 years ago. And I think he was from Portugal, and he had drawn the pattern on the chart, and I borrowed it from him. But obviously we're making fun of technical analysis here, but it does kind of illustrate that the market has been headed lower for quite some time, and that I think we need to pay attention to what's happening. The other thing that's kind of interesting, all kidding aside, is if you notice that the bars tend to go down day after day after day, and mathematically that's equivalent to linear regression. If you could just draw a line through the bars going down. So yeah, so far it looks like we have a bit of a submarine pattern happening in the S&P 500.
I have a critique of this pattern.
Yes.
I think anytime you draw this submarine pattern in the future, you should always make it yellow.
Okay. All right.
It might as well be a yellow submarine.
All right. Little throwback to Ringo, Paul, and the bunch. John.
Yeah. Other than that, it looks perfect to me.
All right. Good to know.
All right. So I'm gonna go ahead and kind of close that for now. I wanted to kind of just talk to you a little bit. I guess we'll start. We read your bio, ChatGPT. I want to thank ChatGPT
Yeah, they
for
do a
doing
pretty
that.
good job on me. I mean, I think we've all looked ourselves up at one point, right? I
Mhm.
hope so. But yeah, I was surprised at some of the things that come back, and I'd say 90% of it is, or 95% is pretty spot on. So
Do you? How did you get started trading? If I can start there, can you give us an idea for your beginnings in trading?
yeah, early, it was probably in the 80s. When as a kid, I always had a fascination with markets, and I would get a notebook and write down the price of penny stocks and all, and I'd see which way they would go. And but I'd get interested in other things, and that would kind of come and go. At some point, I discovered women and beer, and that kind of threw a wrench into my plans. But when I was kind of early out of college, I started putting a little money into mutual funds, and I would print them off, and I had them on my apartment wall, and my apartment wall was plastered with them. And I got kind of bored with that after a while, so I had an old boat that I wasn't using. I think I mentioned this last time, and sold it for $1,000, and I bought 100 shares of quantum computing. In the first week, it went down $1.50, and I felt like I was devastated. Although still had a day job, and I was doing okay in a day job. It wasn't printing money, but I was making money, and $150 wasn't going to kill me. But that was my first lesson into trading psychology. And then from there, I just kind of grew into different things for a while. I ended up at one point I was working as a consultant with a hedge fund, and I was doing the technical analysis for them. I was a sole technician, and then trading markets came along, and it was called Trade Hard back then for a while. It was one of the first financial websites, and kind of by accident, I got into the retail side of business, so to speak, and it's been good for me as far as the education business is concerned, because it forces me to do my homework, and it makes me pay attention. And there's been a lot of days where I just had a really bad day, and I just want to go home. And but having clients makes me sit down in front of the charts for an hour or two and make sure I do all my analysis and make sure it's done. And then a lot of times I'll determine that the day really wasn't as bad as I thought, and then there might be some opportunities for tomorrow. So that's kind of the long story of it. I think I mentioned last time I'd gotten lucky a couple times early on, and that gave me enough money to just stay afloat for 6 months or 8 months or whatever it was. Kind of went from there, using I was probably using Metastock not longer than you've been born, which I think we had this conversation last time. Which
74 is when I was born.
74? No, 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 no. So it was
Yeah,
probably it was definitely the early '80s. So, uh,
yeah, yeah. I'd say that so far my 50s have been awesome though. So, but
oh
yeah. I think
yeah,
I
when are you
started
gonna
in
use '60s?
Metastock. I
That's gonna
started in
change.
let's see, Metastock. I think it was 97. So
Oh
not
wow,
quite 30
wow,
years. Yeah, but
wow.
almost. Right, we're getting closer
Yeah.
than we are to 15. Right. So in any case, now I know we had we spent some time developing some methodologies into Metastock, and they just come included in the software when people
Yeah.
install it. Do you have like one of your favorite methodologies?
Well, I like everything that I've done. Like a lot of the methodologies have come from me trying to explain what I do to people, like the Landry light, which I think is called Daylight and Metastock, which
Mhm.
I guess
Which
you
we've
and I need
agreed
to.
to change, but we haven't yet.
Yeah, we need to sit down and change
I
and
should
change
write that down.
just a couple little tweaks in that. But that came from basically just coming up with a simple way to describe trend to people. And so I do like Landry Light, the bow ties, which is a 10 simple, 20 exponential, 30 exponential, the proper order, which is also part of that plug-in. And that can do a really good job of helping to keep you on the right side of the market. So I like those. One thing I would add to that would be the 10% line with the for the TFM 10% system. And that's a good little longer term market timing type of system. And the designer's intent, so to speak, on that is to get you out of trouble before things really get bad. And we had a signal last week in the queues on that, and I exited. I had a position, and I exited. And I don't do a lot of mechanical stuff. Years ago, I did a whole bunch of mechanical testing, but I haven't done that in a while. There are the expert advisors that are really good, and expert. I was the other day I'd forgotten we had them, and we pulled them up, and it was really cool. There you go. So
Yeah.
there's the daylight, as we called it back then, or Landry light. And if you pull up the cash S&P, take a look at
Okay.
that real quick.
We can do that.
Yeah, so you can see that the red means that the highs are less than the moving average.
Hmm.
And after you have about 10 bars of that, you have a trend. And notice before that, you can see the chopping back and forth,
Right.
green and red and green and red. And then before that, you can see it was trending higher. And look, there's the expert. I forgot about the experts. Those are really cool, if I say so myself.
Yeah, I like them too. And just to kind of, so what we've got here is this just counts the where the closes are, and if
Right. It
part
it
of the,
it counts the amount of lows that are greater than the moving average. So if you went to your left, yeah, okay, go back a little further, and you can see the count starts at it's 0 when it crosses the moving average,
hmm
and then -1 if the high is less than the moving average. You go to your right a little bit,
hmm
and then it just counts each day. Now it doesn't count magnitude, so you still have to look at the chart. And I like to look at indicators, or kind of see them as illustrators, because they're not really indicating anything. They're illustrating what's already in the chart, but they do have use as far as maybe you're not seeing the market might be choppy and you want it to go higher for whatever reason. Again, there's that trading psychology rearing its ugly head. And then when you're looking at the greens and reds alternating back and forth, you're like, well, hang on, it's really hasn't gone anywhere in a while. So you just have to pay attention to what's happening. Like if you look right around the big S, you can see that set up there. But in that particular case,
this
you can
one.
see the market had kind of lost steam,
Hmm.
even though that you had a lot of the daylight or Landry light at that particular point. So that's something to pay attention to. So you always want to take a look at the underlying chart, obviously, and that's where. But these indicators can help you to see what's happening, and it can help you to, of course, keep you on the right side of the market. And you could also use them, obviously, for scanning. So right now, you see you've got all that red, so we got a pretty
Yeah.
serious downtrend. And then you can see, obviously we had the chop leading into this, and then if you go back in time, you can see you have all the mostly green and very little red from September through November or so. And so just by looking at this, and then, like way back in time, you can see we had that really good trend back in 23, and you had mostly green. So if you have mostly green, you want to be long. If you have mostly red, you want to be short. And if it's chopping back and forth, green and red alternating, then you want to be sitting on your hands.
Hmm. Cash is king.
Cash is king. Cash is not trash. That's one thing I was saying earlier. I don't know who first said it, but somebody once said that every asset class will lose at least half of its value in some point in your lifetime. And I've seen Bitcoin lose half its value a few times. I've seen stocks lose half their value several times, and you're getting up there too. So you've seen a few of these things,
Yeah.
Jeffrey. A few of these spills. So it can get ugly fairly quickly, and you just have to remember that, as I wrote in an article, cash is not trash, and there are no good longer term investments. Now, it doesn't mean that I won't hold a market as long as it's moving in my favor. So that the Q position that we took, if you want to bring up the Qs, I'll show you that real quick.
Absolutely.
So the Q position, I think it was like May. If you go to a weekly chart, and if you go
Oh,
back to May of like 23, yeah, all the way back in May, you can actually back it out just a little bit more. And so you see, right as you're coming off that moving average, that was a TFM 10% system, and we'll get that. It's a real simple indicator. It's just
mhm.
90% of the 50-week closing high is the entire indicator. So I'll get that to you. And you're looking for that plus 2 bars of Landry light with a 50 simple moving average, and that's the entire system. And that got us long, I decided to just take 100 shares back in May of 23, and I got out on Friday, and that was a 53% run. And I never dreamed when I got into it, it would go that long. And
Mhm.
as I started to say earlier, the designer's intent for this was to get you out of the market before it got ugly. And Ian McActivey, he's a friend of mine. He's no longer with us, unfortunately, but he would talk about the diaper change moments. He was a gold bug and into gold, and would show like these macroeconomic events and everything. And when the market just sells off hard, everybody just freaks out, right? So I
Hmm.
wrote this system with the intent of avoiding the so-called diaper change moments. And so far, knock on wood, it would have gotten you out of every bear market in history. Now, I forget exactly when I published the system. It's probably been out about 10 years. And so far, knock on wood, it's done okay during that period of time. But if you go back historically, all the way back to the 20s and like 1987, it got you out on a Friday right before the crash. So that's a kind of a neat little longer term timing system. And it's something that I just give away. So that's kind of a neat little thing. And I guess the point I'm trying to make there, because you asked me about my favorite indicator, is it doesn't have to be something really fancy. In fact, it's better if it's not. And I can't think of the guy's name. I'm trying to see if I have his book nearby. But he basically said, paraphrasing, it's a Rolf somebody, a German guy, I'm assuming. And he said that simplicity, simplicity is the yeah. There's the system right there. Simplicity is the is like the zenith of a long, complicated journey, not the beginning. So, but yeah, hold little scene from Braveheart there.
I don't think we can duplicate these
Can we get the?
images.
Yeah, we'd have to get permission, I guess, from Mr. Gibson for that. But you see, as long as you have that Landry light, and as long as you're above the that 10% line in there,
This is
and
where you said that you bought,
yeah,
and
that was the entry right there, and
just
it
recently sold because this fine was violated.
yeah, it just came in. It's not when it touches it; it's when it closes below it.
Right. Okay.
And the original research was done by accident on a calendar chart versus a weekly chart. So I exited it on a Friday as opposed to when it first closed below that. Just
What do
just
you
FYI.
So what? Let's go back into the. I'll close this because it was. Sorry, let me send that away. Um, what would you be looking for? You said you just recently closed. Can you kind of restate what you'd be looking for to go long again? Because I think that's a lot of. I think a lot of
Yeah,
people are
yeah.
sitting on their hands, just going, "Okay, well, what am I going to be looking for if I want to get back into the
Well,
into the?"
if I was following just that one particular system, I would need two weekly lows above the 50-week moving average, and it would have to close within 10% of the 50-week closing high. So I'm just eyeballing it. Looks like the closing high is around 550 or so. So whatever 90% of that would be, plus two lows above the 50-week simple moving average. So that's the entire system right there.
Okay.
I've there's one of my clients. He's been with me. Well, he hadn't been with me since the '70s, but he's been trading since the '70s, and he's pretty good with market timing. And he's usually getting out the way a little bit earlier than I am. And but he once said, which was very flattering for me, that the TFM 10% system is as good as anything. And I'm not saying that to brag. I give the system away, but it just shows you how something really simple can actually work. And so that's, if you're using that metric, that would be one metric. Obviously, the bow ties and the other things that I look at would be other ways of doing that. If you want to look at like bow tie proper order,
Let's look at bow tie. We can
yeah,
talk a little bit about that one. I
okay,
assume cues are fine for bow tie.
yeah, that's fine.
Okay.
So the bow ties. So you see the bullish and the bearish down below,
Right here.
and I think we have we used to have the count somewhere too. The count should look something like the Landry light, but that's okay if it doesn't. But you can see, as long as the
I
10
don't
simple
have.
is greater than a 20 exponential and the 20 exponential is greater than 30, you're going to have, it's going to be bullish. Okay. And
Uh-huh.
then when the three flip over, it's going to be bearish. And then, so ideally, you'd want to see these moving averages come together and spread out to the upside. That would be one signal that would possibly say that we're bottoming out, at least temporarily. Now, one thing with these transitional setups like this, you see how we have that bow tie that just came off of all-time highs of around 540 or so.
We're talking about
So
this.
yeah, that one right there.
Yeah.
So that's very significant when you have a bow tie off of all-time highs, because the most amount of people are trapped in the wrong side of the market. Everybody at that brand new high is happy, and then when that market begins to drop, anybody who bought at those levels above that as it drops is going to be a hurt and pop, wanting to first get out of break even, okay, and then at
Hmm.
some point might be forced out, and that could exacerbate the slide. But now, if you're looking at the cues, you do have a lot of overhead supply to get through. So all that sideways trading between those double tops, you would have it would have a hard time getting through that. Likely, a lot of people will be looking to get out at break even. It's just it is human nature. I'm a man on the street kind of guy. There's a guy in the gym. He's been a Russell 2000 forever, and he kept telling me every day, as soon as he gets back to new highs, he's going to get out. And I tried to explain to him, as a trend follower, if it's making new highs, you want to stick with it. So
Hmm.
it's just human nature never changes. So I would imagine a lot of people are probably looking to get out of break even, probably around 520 or so, maybe a little bit earlier, maybe 510, 520. So that's going to be that's the market's going to have a hard time going get back through that. If, of course, it doesn't do it fairly quickly. If it does it quickly, then people don't have enough time to think and worry about it. But eventually, as they lose in money, as they begin to lose more and more money, they might actually need money. And as I often say, quoting Tom McClellan's mother, everybody uses timing their investments. Some people buy when they have money, some people sell when they need money, and others use more sophisticated methods. So it's a paraphrase, but you kind of get the idea. So that's where the technical analysis comes in the charts, obviously, as you're reading the mood of the market, so to speak, and in reading the mood of this market or the S&P 500 for that matter, you've got all that overhead supply to get through, and that's going to be really tough. Semiconductors, SMH would be a good example of that. You can put the spiders up; that'd be great too.
Yeah.
Yeah, so you see all that trading in the spiders that's
Mhm.
in between the yeah, right there. So that's the market's going to have a hard time getting through that. And if you take a look at like the semiconductors, that's a little bit more um, pronounced example. SMH be fine. So you
Oh, wow.
see all that sideways trading. You actually back the chart out a little bit. So we broke down below that, and so it's going to have a really hard time getting through that. So anybody who bought it in that range is going to be looking to get out of break even. So that's not a good thing. Usually, to I like the semis to back the overall market, the market to head higher, and the semis to confirm what you're seeing.
Okay. Interesting.
I don't mind a bear market. I prefer not to. Shorting is kind of a pain.
Yeah.
It's a lot harder to hold on to trends longer term on the short side because the covering rallies are so vicious. Although we really haven't seen much of a covering rally just yet.
Have you what do you find that you're mostly buying when you're trading? Is it ETFs like SMH? Is it
No, no, I'm looking
stocks?
for. I'm trying to find an inefficient market. If you pull up SKBL, I think that's the ticker. That would be an IPO. That's one that actually worked until it failed miserably. Yeah, Skyline Builders. You could see that if you're that's a very inefficient stock because it moved. What did it go from 4 to 12? It made a 3 or 4% move. If you're going to beat the market, or in order to beat the market, I should say, you're going to have stocks that are more volatile or more inefficient than the overall market. And that's a simple little IPO pattern. I did a webinar. That's why I was a little or last minute getting here because I was doing the other webinar. But I just talked about that, and that's just a really simple pattern where I'm just buying a new closing high in IPO. So IPO is very inefficient. I like trading them. You don't always get a lot of setup, especially when the market turns like this. I will trade thicker stocks, especially the short side, but I, I want to find a stock that has the potential to make an inefficient move. Okay, so it's a lot harder to beat the overall market if your stocks are the same volatility as the S&P. So I think the HV and the S&P last I checked was like 16 and whatever. So if you're trading a stock with a HV of 16, it's gonna be really hard to beat the S&P. This stock here, now that it has an HV, it didn't have one when it starts out as an IPO. But if you look at like a 50-day HV, if I had to guess, it would probably be 80 or 90 or 100. Much, 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 much higher. Maybe 5 times more vol in the overall market. So I'm seeking out that inefficiency, and I'm looking at a lot of stocks every day, upwards of 1,500 to 2,000 stocks
Oh,
in my
wow.
analysis. Yeah, I look at a
What
lot
kind
of
of charts
stocks.
do you pull up every day?
What's that?
Every day, 1,500
Every
charts.
day, absolutely,
Okay.
absolutely. Now I'm going really. I'm like the rat going for the cocaine. Just I'm hitting the button really, really quick. In fact, I actually I've worn out my wrist and had one surgery on my elbow from all this keyboard stuff. I actually use foot pedals, and so kind of like hitting the foot pedals like a speed metal man to go through these. And
Okay.
it
Nice.
goes quicker after time. And you're not analyzing the entire chart. You're looking for short-term pattern, maybe 3 or 4 days, what it did over the last 3 days off of new highs or off of new lows, whatever the case may be. If that looks okay, then you're looking back a little bit for something glaring, either good or bad. And it's kind of like Malcolm Gladwell's Blink. After you do this for quite some time, you get better and better and better at it, and you go faster and faster and faster. And
Oh,
then I
for
call
sure.
that down to some momentum list from there. But
Oh,
when I
yeah.
speak in person, usually I'll say any musicians in the audience, like you, so you're a musician. Uh, you wail
Not.
on that axe,
I'm
right?
an aspiring musician. Let's keep the record straight. I can
Okay.
really slaughter some good Beatles songs.
So how do you can you do what was it? Norwegian Wood was. I felt like if I could play that song, I could know how to play guitar. And as soon as I learned it, I quit playing guitar. But look that one up. You should be able to play that fairly soon. But
I'll
anyway,
add
the
it
point
to
I was
my
getting
mailing
to,
list.
believe it or
Yeah.
not, what's that?
I'll add it to my list. Yeah.
Yeah, yeah. Anyway, when I speak in person, I ask, are there any musicians? And usually somebody raises their hand, and I was like, well, how'd you get good? And they look at me, like I pooed my pants. Like, well, I practice. So if you want to get good at looking at charts, then look at a lot of charts. And that's kind of the way I look at it. And
Mm.
then, see which one. If you see a move that takes off, look at the chart and say, could I have gotten in on that pattern? Should I have gotten in on that pattern? And as I often say, you can't kiss all the women. It's not always a setup. It's not always a pattern. But if you do see something you trade, or maybe some new pattern that you keep seeing over and over, you'll begin to see the pattern recognition over time. Like the buy at D, I was watching all these IPOs just take off, and you see this one went from like 6 to whatever. And I noticed that, well, wait a minute, they obviously, because they come public, they don't have a lot of bad memories in the past,
Hmm.
like the overhead supply we talked about earlier. So what if you just bought them as they're making new closing highs? And then I developed a little bit of a system from there. I call it buy at B. If a market's going to go from A to C and B's in between, it's going to have to pass through B along the way. And it's pretty much that simple. There's a few caveats, like you need enough volume to trade. It's got to be thick enough. And then you want a fairly decent range. You don't want to buy something that's just, moving around a few cents, but it makes a new closing high. And then I have some price parameters, but it's very simple stuff. Like it's ideally you want less than $30 and a little bit more than $5 a share. This one was kind of on the cusp of that $5 rule, but when it began to break out, it began to expand higher on that big green bar right around that little S, and that's when I got in on that one. So, but anyway, getting back to looking at charts, as you look at more and more charts, you get better and better and better at recognizing these patterns. And it could be really, really simple stuff like a Landry light pullback is one of my patterns. And just because you have some moving averages on here, notice that this market on that big red candle down, that would be a setup right there. Let's see if you have that in there. I guess it'd be daylight pullbacks.
I'm looking. Daylight pullback. Yeah.
Yeah, there you go. Okay, let's see if it registers. Yeah, see that. See where it says setup. It pulled back to the moving average. So that would have
Mhm.
been. I probably would have taken that one. I was already long anyway, but just something as simple as a pullback to the moving average. Just off the top of my head, I'm trying to think of one. Try K and F. That was a while back. Just leave that chart on there, I guess, or leave. Yeah.
There we go.
Okay. Go back to the left. If you find a broker that lets you trade off the left side of the chart, let me know.
Yeah. Yeah. I
We'll see
just
in
have to
October.
get the DeLorean out.
What's that?
I just get out the DeLorean. That's what I do.
Get out in DeLorean. What's that? Oh yeah, get 55 miles an hour. Yeah,
Yeah. Yeah.
yeah,
Yeah.
yeah.
Yeah. Okay.
Yeah.
Okay.
Yeah, this might
Uh,
not have been the one I was thinking about, but you see that one little setup. It might have been there. It might have been there. See what says setup right after the D on the ORD.
right
Yeah,
here.
zoom in a little bit. No,
This one.
yeah, that might have been one. Okay, yeah, all the way to the left was one,
Right.
and then yeah, that one there. And then the one I'm probably was thinking about was a more recent one, but then you see it ended badly, but there was a yeah, right there.
Yeah.
But
Mhm.
if you were using money management, you'd have been okay. And see, that's just a pullback to the moving average. That's all that is. And you see the Landry light or the daylight up above goes from high in the greens like 20 or so, and it comes down to 0. And so you could actually just write a little scan for that and scan. That's a simple little pattern, like you were saying earlier. So just keep it really, really, really simple.
Yeah.
And when I'm doing I'm looking at the charts, which I call scanning, whatever, but I'm looking at a lot of charts. I run a very loose parameter scan that just looks for recent new highs or new lows for the short side. And I'm just looking at a blank chart with no indicators whatsoever before I put any indicator on a chart. And usually, if I like the setup, I won't even bother. If I like the way the chart looks, I put an indicator on it. So I'm not using any, but the indicator does kind of help you in the scanning, of course, and it also kind of helps you see something that's already there. But a lot of times, the point I was trying to get to is that I can eyeball a chart and tell you if it's a setup with the moving average, even if the moving average is not there, just because you get kind of used to looking at the charts and what to look
Sure.
for.
Yeah.
But
So
it's not some kind of, just real quick, and I'll wrap that up.
yeah, no, you're fine.
It's not some kind of crazy art or anything. There's a lot of things like if the chart looks like somebody earlier asked me about U.S. Steel X, and the stock looks like electrocardiogram. Well, if you're a trend trader, that's something that you don't want to be trading because, especially if you back the chart out a little bit, just look at that. It's up, it's down,
Totally
it's
agree.
up, it's down. It's
Yeah.
what I call a Jackie Mason stock. So you can't trade a stock like that because it's just all over the place.
Well, you can, but you
Yeah,
shouldn't.
you're gonna hate your life.
This is a stock you trade if you like pain.
Yeah. I
Okay,
mean,
so
I'm hesitant to say it, but you could probably trade a stock like this with a reversion to the mean system. But reversion to the mean systems, as I often joke, will work until they don't.
yeah.
You can get a lot of trouble with those because you're fighting trends, obviously.
So you'd said you look at 1,500 charts a day every day.
Yeah,
Out of those, I kind of want to know how selective. How many how many do you end up kissing
I had I
to use
had
your rate?
um I had 15, I think, yesterday that came out of that, and I
Okay,
copied those over to another momentum list that probably has, well, right now it has about 200, but I could probably whittle it down to 50, if that many. And from those 15, and then I look at that momentum list carefully. I'm not going as quick when I go through that list the second time. And I could see if there's anything else that's worthwhile, but there'll be days where I won't have any. Coming into today, I had two setups, and neither one has triggered yet. And then we're only short. We only have one stock that we're short at CCL. Short side can be a little tricky because they all go at once, and if you take 10 setups at once, then the market has the mother ball rallies, and you hate life. If you don't, then of course you miss the mother ball trend. So if you put a bow tie on that one, it
sure.
might work out perfectly for the example. But it made an all-time high.
Oh, I need to do this right.
Oh, it came up. Yeah, there it is. So again, it made an all-time high. I think it's an all-time high. And then, yeah, okay. So see, you got that nice little bow tie there, and see the sell signal. Okay.
Right here. Yeah.
So the trigger would be on that red candle a couple days later.
This one.
Yeah, right there. So that was your trigger on that one. And notice it's coming off all-time high. So at all-time highs back in January, early February, everybody who's ever bought that stock is happy, and then all of a sudden it begins to crack. And
Mhm.
then obviously they start losing money, and then more people kind of look to bail out of the market. So that's the only one we're short right now. But if you take a look, I think like RCL was one that set up afterwards, which would be same leisure type of cruise line type of
Mhm.
thing, and that should probably also be yeah. So there's a bow tie there. You see to the downside after hitting all time highs. So that one's not as clean as a CCL, but you kind of get the idea. And that's the other thing too, Jeffrey. You pick up themes, so it's like, okay, I noticed that CCL setup, RCL's rolled over, so we know the cruise liners aren't doing that well. In my minimum list right now, I have a lot of um, gold stocks now, okay, because that's
Mhm.
the only thing that, and I'll probably start seeing some copper stocks because that's the only two areas that are really trending. Like if you
Alright.
pull up CPER, which is the copper ETF, you can leave this chart. I mean, leave the same indicators. It's fine. So
Yeah.
see, that's headed higher, obviously, and you notice how it bottomed out and made the bow tie, and then it took off nicely from there. Now it doesn't always work that well, believe me, but you kind of get the idea that it doesn't have to be rocket science with this type of stuff, even though we're using some moving averages, but that's not really that complex if you think about it. And
I
then,
think
of course, the thing I'm known for is drawing the big blue arrows on the chart.
yeah, the trend line.
That's how I got my nickname, trend following moron. The Without going through the boring details, there was a famous trader who befriended me, and he absolutely was blown away that I had this uncanny ability to predict markets, and all I was doing was just drawing these big blue arrows on the charts. And that was in '99. Of course, everything was going up, and he started shorting because he confused the issue with facts, and it got kind of ugly between us. And the email was anonymous, but long story endless, he called me a trend following moron.
Oh, yeah,
So
yeah.
and it just stuck. I mean, I was depressed for a few days, and then I realized. Then I tried to outsmart the market by shorting what I thought was a top or buying a bottom, whatever the case may be, and I got burnt. And then I got to thinking, well, maybe I am just a trend following moron. So
Well, I always, you know, I I, I like one of my biggest memories, and I'm just going to draw this a little bit real quick here, is how you define trends. So you'd call this probably a downtrend.
yeah, sure,
You'd call
yeah,
this an uptrend,
yeah. And then the
and
chopping
then
in the
no trend.
middle is sideways, the big blue arrows. And I think I don't know if we've seen each other since, but I have the instructions printed on my arm. I don't know if you can see them, but I
Yeah,
have
yeah.
the
You said that. Yeah, yeah.
yeah.
Cool. That's awesome. Um,
Yeah, sometimes I try to outsmart the market still, You think I know better, but every
Maverick
now and then.
Maverick said he wouldn't trade X even if he was using my money. Saki probably would. Um, let's see. But he also asked what the moving averages are on the bow tie. So
10 simple and 20 exponential and 30 exponential.
mhm.
I like the relationship there between those three. The 10, I keep that simple because it's a shorter time period. And when you get these nice clean crossings, it suggests that the trend is turning. And obviously, you're going to have a little lag in the moving averages, but that's okay. So when you see the bow ties flip from that bearish to bullish, meaning that the 10 was below the 20, the 20 was below the 30, and then it flips over just the opposite, uh, 10 above the 20, above the 30, then it suggests that a trend might be turning, just like we looked at the spiders and the Qs, and you could pretty much, I guess, at this point, throw a dart at most markets except for gold, copper, and a few defensive areas like the drugs. But other than that, most areas are looking pretty ugly at the moment.
do you you had kind of talked a little bit about money management and money
Yes,
management strategies. Can you talk a
yes.
little bit more about do you limit the size of the positions that you take? Do you limit the number of positions? What goes into that? Because I think a lot of people when they start to talk about money management,
Yeah, absolutely. Absolutely. When I speak in person, the persons who ask me about money management or the people who are going to make it, I think, as traders. Everybody wants to know all about the gee whiz and the setups and everything else. My money management is really simple. If you go back to that, maybe go back to that, what was it, SKBL, and I can maybe walk you through a little bit there. But the premise is, uh, and now this was a small position. I didn't take a full size position on this, but you would take your overall account, if stopped out, you would take no more than 2%. And that doesn't sound like a lot, but when you're trading, 2% losses add up really quickly. So
sure.
that's plenty big enough. That's huge. And so when I got in that big candle around the SK, the little SK, so my stop was 2 points away on that because that's what it called for over in February, like February 18th, I think is when I got in on that one.
Hmm. Okay.
And so I got in on that bar there, and my stop was 2 points below. Now, right before that red down candle, I took partial profits. So right to the left of that.
Right.
So I'll actually sometimes maybe use a limit order and take partial profits. So if I'm risking 2 points, okay, then I'm taking partial profits at 2 points. Now, if stopped out, obviously, I think it comes to 1,000 shares. So if stopped out, I'll lose $2,000 per 100K. Okay, just to keep the math easy. So in this particular case, I took a small position here. It was only like 400 shares or so, but I had a 2 point stop and a 2 point initial profit target. Now that's a risk of 1 for 1, which some people might argue with having a negative expectancy, meaning that you lose more than you make. But the however is occasionally you catch a longer term trend, and that's where the real money is. So once you get that 2 points of initial profit target out, you take off half your shares and you're bringing your stop to break even on the remainder. And then what you do is you let that slowly and gradually loosen up over time as the market moves in your favor. And I can get into some details on how you do that. But the bottom line is you're making the transition from shorter term trader to longer term trader. And this is something I was just talking about earlier as far as a short term trading. I'm slotted as a swing trader, but I'll stick with positions as long as they move in my favor. So I just got out of the Q position, which I was in since spring of '93. So that's almost a 2 year trade, pretty close to 2 years in that trade. But with like a regular stock or whatever, I'm getting in for the short term and then hopefully, and a word you should never use, but hopefully hanging on for the longer term. And just to kind of, this is a lot of information I know, but if you think about longer term trading, you look at somebody like the Turtles, and there's not a whole lot of those guys that are still around because of the drawdowns are abysmal and your accuracy is going to be really, really low. So for me to catch a 50 something percent move in the Qs, that's a little bit of an outlier. Okay, that's not going to come along every day, obviously. And I've actually been told, hey, why don't you tamp it down a little bit on that? You're making it sound too elusive, but trading can be a little elusive at times and all. So, but the idea again is you want to take those partial profits and you want to trail those stops higher, and gradually you're kind of changing hats from the swing trader to the longer term trader. The swing trading, short term trading doesn't make enough. Okay, I just got whacked 90% a few weeks back in a stock. I've been trying to forget about it, but I wake up thinking about it because it's aggravating, right? But
Yeah.
if I were trading for only long term gains and trading size, a spanking like that would have really wiped me out, you know. So it's really hard to capture these longer term trends. Your accuracy is only going to be about 20. I think it's like 23%. There's a 23% chance you capture a longer term trade, but that's where the money is. Okay, so it's kind of a, you got to figure out a way to have you cake and eat it too, and that's why I go in for the swing trade, because you can only predict the short term. But I am hanging on to that second piece, and that's where you beat the negative expectancy that the system designers like to look at. And by the way, couple things. They say things like you want to have a 3-to-1 risk to reward. Well, you're 3 times more likely to get stopped out at 1x, right?
Hmm.
Than hitting that 3x profit target. I know we're getting a little deeper into the weeds and
No, I
you
like
probably
it.
wanted to, but that's why the 1 for 1 money management, once you get to break even, then you're free rolling, so to speak, on that position. And that's probably one of the few secrets of trading, is if you could establish enough free positions, so to speak, where if you get stopped out, the worst you do is break even on the remainder of the trade. You position yourself for the potential for a longer term home run, and that's where the real money is going to be. It doesn't happen that often, but every now and then we'll have one run 400 or 500%, and that's when you really pay off, or really pays off, I should say. Sorry you asked, huh?
No, no. If I didn't want an answer, I wouldn't have asked the question.
No, I'm giving you a hard time.
Do you have any particularly memorable trades that changed the way you were trading?
Oh, that's a great question. Well, I think the first trade, as I kind of alluded to earlier, we talked about the last time we got together, was I had looked at my charts and I didn't see the setup, and then I went out and had a couple of beers. I was a little younger and single, and when I got back, the pattern was there plain as day, and it I think that made me realize that don't get drunk before you trade, but it made me
I
realize that you need to,
think we need to write that down as a rule. Don't
yeah, you need to
drunk.
pay attention. You need to pay attention to what you're doing, and that kind of woke me up to that. There's been many trades that remind me, like I just said, lost 90% on one, that bad things can happen. Um, I did, and one thing that I wrote about recently is you don't have enough time, you don't have enough money, nor do you have enough mental capital to trade every system. And I think I tried a little too hard to trade everything in the past. And you just have to pick one pattern, like Linda Rasky says, all you need is one pattern to be successful, and not try to trade everything. I think early on, I was trying to start markets that were high, but I was also being a trend follower and doing all these different things. And it's like one by one, each different trade gave me a lesson. Like, don't do that. Now the problem is, and it's kind of a Mark Twain kind of quote, is that you have to be careful not to take away a lesson that's not really there. And it
Mhm.
does take a little experience to realize that. But I will tell you this: if you've been trading for a little while, and we've all done this, it's like you get out of a trade at a loss, and then you tell yourself, well, I knew I shouldn't have taken that trade. So you knew going into the trade, and that's kind of circling back to the trading psychology. And that just kind of builds up over trades. And the thing is, what's weird is you would think that after many years you'd come in and you would just be perfect, but that's just not the case. You still make mistakes. You just try to make fewer of them and try to correct a little bit more when you do them. But each trade can certainly teach you there. You got to be careful again not to take away a lesson that's not there.
Um, I know this is going to use a word that we don't use or we're not supposed to use, but we've kind of had a little bit of a shakeup recently in the market.
Yeah.
Do you feel like do you feel like we're just getting started? Do you feel like we're halfway there? Do you feel like the volatility, like what are your expectations between now and let's say the summer?
It feels heavy. It feels like it's the beginning of something. It's like I don't make these big picture predictions. I'm a trend follower.
Hmm.
One thing that I tweeted back to Linda Rasky, she had pointed out that like a week ago, she didn't think it was a low based on whatever she was looking at. And I tweeted back, it's like, this is the most bounceless sell off that I could ever remember since I've been doing this. So I'm a little bearish here. We haven't, the S&P 500 so far hasn't dropped below that 10% line, and it hasn't closed below the 50-week simple moving average. If you want to put the cash S&P up. So I would keep an eye on that, and let's see if I'll pull it up over here too, just to give you
Oops.
a framework.
I have to remember how to type. Hold on.
So the S&P 500, yeah, it did dip below the 50-week simple. But right now, the 10% line, 10% of the 50-week closing high would be 5503. So if we close on Friday below 5503, that would trigger the same system that just triggered a Nasdaq. I'm sorry, the Qs, the TFM 10%. So for now, it's looking kind of ugly. I see the E-minis. That's fine. You could see that we had the bow tie off of all-time highs. That's never a good thing. And so far, we haven't seen much of a rally. We haven't even rallied back to the 30-day EMA, which is way up there at 58.15. So I think we're in trouble for now. Again, I don't have that longer term sell signal just yet, but now I think it's important to pay attention. The other thing you might want to do, put a weekly chart on here.
Yeah.
We'll take a look at the weekly bow ties there. I think the weekly bow ties are still in uptrend proper order. Okay, so you see your bullish down below, and
Mhm.
like I said earlier, you always want to look at the chart. Okay, so
Yeah.
if you draw a line over those top of those funny looking charts, I know what are those funny looking charts you're using. Um,
Oh, are you talking
Jim,
about the candles?
yeah, I'm joking. Uh, but if you draw a trend line over the top of those highs, you can see that even though the markets, the bow ties are still in uptrend proper
I kind
order.
of missed it, but
Yeah. Okay. Now go over the recent highs, or drag it over. There you go. Go straight. Just draw a horizontal line is what I'm trying to say. There you go. Okay. Okay. That's perfect. And then draw one over the tops of the highs,
over the
or
tops
just
of the
move it.
highs.
move that one. You see all the highs, the all-time highs? Start drawing a line at all-time highs and then go backwards.
Okay, hold on.
Yeah, go back like 3 candles, new line. Yeah, horizontal line's fine.
Oh, you want to
Yeah,
do
right there.
horizontal? Okay, right
Yeah,
here.
horizontal line. There you go, right there. Bam, perfect.
Right here. Yeah, okay.
Okay, so you can see we've gone sideways for the most part. You could kind of drop that line down a little bit, and you really haven't made go up a little bit, just above the highs, so right around the highs. So you can see the market, even though it's still bullish as far as the moving averages are concerned, the moving averages, two things have begun to turn down, and notice they flatten out. So it's kind of right now, it's kind of a very orderly rollover if you think about it by looking at a weekly chart. So if we go much lower, but if we go much below 550, I'm sorry, 56, yeah, 5,500, then you're going to start getting sell signals, and then those moving averages will come together. Now, if you back that, go to like a cash S&P, and
Let's see.
let's use that as a proxy, and then we'll take a look at those longer term,
I can. Let's see. I don't have the.
cash.
I don't
Spiders
have
will
the
work.
cash just because I don't pay for the exchange fee because I'm
There you go.
technically a professional. But we
I
can do
got
SPY.
you. Do a weekly chart on that.
Weekly is done.
Oh, it's already week.
Yeah,
Okay, now just squish that up a little bit. I don't
like
know.
that.
No.
You want to see more
Show
data?
me more bars. Yeah, yeah.
Okay.
Okay. So notice longer term, you could see the bullish and bearishness with the moving averages. Now the COVID rally, we had a daily signal, but by the time the weekly triggered, the sell off was already done. So that was like a spike type rollover. But if you look at like 22, you could see when you flipped over to the downside, you had a kind of a pretty serious move down with the moving averages. So that would be another metric to really pay attention to. And I don't know how far the spiders go back, but if you go back to the major bear markets, you'll see that they really the both time moving averages would have kept you on the right side of the market for a long, long time. Yeah, so go back. So okay, yeah, it goes all the way back. See, 2008, 2002. See, look at
Yeah.
those sell signals on the weekly. So if you see a weekly sell signal, the market is really in trouble. But you could see that not everyone turned into the mother of all bear markets, but a lot of them did. And that's
Yeah.
Greg Morris says we treat every sell signal as if it's going to become the big one because you never know when you're going to end up with a bear market or something like that. So that would be another metric I keep an eye on is those moving averages. And again, I'm looking at my other one of my screens here, 5503 in the cash S&P, and then I'll do the spiders too, just so you have a reference. And 548 round numbers. So it's really not too far from a weekly sell signal. And then again, like I said, those moving averages, as long as we stay below them, they'll begin to catch up with price. And that's something I'd pay attention to as far as the where we are. But yeah, right now it looks like we're in the early phases of something bigger. The longer term models are still a little bullish, like the Q's already triggered a sell signal. But in the S&P 500, the longer term models are still technically bullish. Like this is a good example here. But if you look at the chart, you can see we're definitely making new lows, and the moving average is definitely beginning to roll over a little bit. So that's something that you want to pay attention to, obviously.
All right. Saki says rule number one is preserve your capital.
Amen.
Rule number
Rule
two, I
number
believe,
two,
is
see you
trade
do
what
rule
you
number
see.
one.
Yeah. Well, I'm going to add another rule from you, Dave. Rule number 4: don't trade drunk.
Yeah. Well, I don't know. Yeah, I don't know. I'd have missed that trade had I not. But yeah, of course not. Yeah.
No
But
animal trading
that
either.
woke me up to the fact that you need to that you have to see things with an open mind, and we all kind of we have to be really careful not to see what we want
Mm-hmm.
in a particular market. And once you become an active participant, you've got a dog in the fight, so to speak, and then you tend to think you bias and talk you bias. Like, and I'm not picking on anybody in general, but my friends who run a lot of money who are long oriented by the way their charters are set up, they tend to always be a little glass half full versus glass half empty. And right now we're kind of becoming glass half empty a little bit, and
Yeah,
and
I can
they're
feel
and I
that
haven't
too.
talked with any
A
of
little
them
bit.
lately, but they're probably still a little bullish just because they're mostly long. And you just got to be really careful to see, as I often preach, what is.
Very good. DaveLandry.com, the best place to kind of find you.
Yes,
All right.
yes. And then
Any
you need to email me, David@DaveLandry.com, and um, I'll give you all the other contact information if anybody's interested. So,
Very cool. I'm gonna go ahead and type that in here. We'll make sure it's in the show notes as well. And any final thoughts?
um, just believe in what you see and not in what you believe. Let everything shake out a little bit. The longer term trend is still up in the S&P 500, but that's changing quickly. Don't be a hero. A lot of thoughts. Focus on what stronger areas are left. And I wouldn't, as I said earlier in the webinar, I wouldn't go after the defensive areas because they're not going down as much or going up a little. I would focus right now more on like the golds on the long side and the short side. Throw a dart. Throw a dart. Most sectors, we talked about leisure earlier. Just tons of sectors are in trouble right now. So I would look for the early rollover in those areas. I wouldn't go after stocks in longer term downtrends on the short side. You want to catch them like we just talked about when they're just beginning to roll over from those higher levels. And I think that's pretty much it. We didn't talk much about psychology, but we can circle back to that in an upcoming interview if you have me back. I'd be happy to do that.
Well, we'll have you back. This was fun, and
Thank you,
it's always
Jeffrey.
enjoyable to have you here. Bill says, "Trade what you see, not what you think."
Yeah, that's a good one. I like that one.
I find if I'm looking at a chart too long, I'm like, okay, well, this is obvious that I'm trying to sell myself on buying this. Like, and I just that in and of itself is just like, okay, well, I'm going to move on now.
Yeah, it should be. It should happen like the Malcolm Gladwell blink. It should happen like with a little experience, but you should get excited. Like, okay, this looks good. I'm going with it, and those will be your best decisions once you get used to it, as opposed to kind of picking things apart and all. So, but yeah, I'm with you on that.
Right on. Thanks for coming in again. Good to
Thank
see
you,
you as always.
Jeffrey. This is always fun. I appreciate you invited me, and thanks to Metastock for having me back. Thank you so much.
Of course. All right. Thanks, DaveLandry.com, everybody. If you're watching us on YouTube, like and subscribe. It helps a great deal, and we appreciate it. Thanks, Dave.
Thank you, Jeffrey.
Oh, wrong button. Bye.